Good morning, everyone. We're just going to let a few minutes, maybe 60 seconds go by, let everybody kind of spool into the Zoom, and really excited to go through this month's edition of To Catch a Fraudster. We'll be walking through more of a year in review with some stats and updates on current market conditions. So with that, we'll just give it about 30 more seconds as people file in. All right, not to penalize the timely, I'm going to get started. For those of you that I have not had the privilege to meet, I'm Tom Cronkright, one of the co-founders of CertifID, also an attorney by trade, a member of the Michigan Bar, and large title agency owner here in Michigan. Every month, the CertifID webinar is designed to bring fresh content, to bring ideas and bring points of view against what we're struggling with as an industry. In most cases, those are dissecting a most recent wire fraud or cybersecurity incident. This month's, we have a very special guest that I'll introduce momentarily, but we'd like to go a little bit wider and talk about what we're seeing in market for a few minutes. The most recent IC3 report from the FBI, the voice of the title agent report, and just kind of open the bottle up a little bit, let it breathe, and have a dialogue around what we're seeing and hearing and thinking about as we approach our spring markets respectively. So if you have a question, please put them in the Q&A panel of Zoom. I've got that up on a different screen that you don't see. But without further ado, we're going to get kicked off here, and make sure that any content that we share here, you absolutely have permission to share out to your internal teams, to your network of referral partners, be it real estate agents or bankers or attorneys or commercial or residential developers. This is really meant to be an open dialogue, a peer-to-peer discussion around these topics. So with that, I've had the privilege of having Ed Lorette on with us. Ed is just an industry sage in so many ways. He is one of the owners of Western Resources title company in California, market dominator in the markets that he competes in. What I've appreciated most about you, Ed, is just your perspective. We were just talking about, when things get tough, companies like ours just get better. And I guess I'd like to jump in, and I don't know if you want to introduce yourself a little bit more, Ed. I did a really quick overview, but I know you've been in the industry many, many years. You've developed one heck of a brand, and I want to thank you for attending today.
You're welcome. You're welcome. One correction that I need to make, and that is I'm not an owner of the company. I wish I was, but I'm the president and CEO, and I actually love what I do. So it's to me, I was telling somebody the other day, it's an amazing journey I've been on over all these years. So yeah,
no, well, to me, you certainly act like it. So hats off. So I want to dive in, and let's just cut right to what we're probably all feeling or experiencing with the interest rate hike, low inventory, more licensed real estate agents competing for fewer deals. Just in a few minutes, Ed, how are you framing this year? What comes to mind, and how do you think we should be thinking about this year?
First of all, I think clearly this is a market that's going to change dramatically because of interest rates and also high inflation. So we do have to make adjustments. And I think what's really important this year is not to be focused on what's really going on the outside. We need to understand that, but not let that really negatively impact what you're doing. We need to, as leaders, we need to make sure that no matter what's going on outside, which quite frankly, most people can't control, we need to stay focused on what we do best. Now, in answer to the question about the business, it's going to change. We've seen dramatic change in our refinance business. To give you an example, for maybe July or August of last year, we were doing 1,200 refinance transactions every single month. We're projected to do 400 this month. That's like a 67% reduction in volume. So that's significant. Now, on the other side, I think the resale and commercial business are going to be fine. There are fewer listings and inventories low, and quite frankly, I think the inventory issue is going to stay there for years to come. So what we all have to do is focus on doing a better job of servicing our customers, and also getting more business that we hadn't been able to get before. And we have to build better relationships with our clients. So I think if we focus on providing that higher level of service and really building the relationship with the client, I'm a firm believer, as we're not in the business just to sell something. That's just a product we have. Whether we talk about making profit, that's not what we focus on either. We got to make profit, obviously, because that's the lifeblood or oxygen that keeps our company alive. But that's not what we really should be focused on. We should be focused on how do we make a difference in the lives of our customers, and how do we help them build their business. And we do that by providing different tools and products to help them find the listings, close the listings. So we become their business partner, if you would. So when we have those kinds of relationships with customers, we win. And so California, it's a lot. I know the business is done a lot differently throughout the United States, but especially California, it's a very unique market. So we drive our business by our sales team, and today we have about 40 salespeople on the street trying to bring in business. So it's going to be an interesting market, but flattening of prices and so forth. But I think one of the other things I think is going to happen is as we go into the year, you're going to see, as the interest rates go up, you're going to see prices flatten out on homes, and you're going to see people reducing their prices of their houses in order to sell them. So I see all that as good. You might think I'm crazy, but I see that as good. It gives us an opportunity to take advantage of what's with this market that we're in. So
yeah, I agree. Just to layer on a couple of things there that you had mentioned, I think every side on a transaction is going to matter this year. I think the work product has to be just absolutely perfect. We need to find ways to get ahead and anticipate the next question that may come up on a file. And to your point, how do we create memorable experiences that referral partners want to see more of, right? And if I just put my title owner hat on, I'm completely aligned that these are the markets that define you, that make you better. It provides an opportunity to level staff up. It allows you to level up processes and procedures. It allows you to introduce new things because people have a time to take a meeting. And like you mentioned, Ed, hey, we've got technology, we've got tools, we've got solutions, we've got things that are here that are enablement tools, and they have a minute as we kind of catch our breath and we think about what are the next few years. Because I'm in alignment. I saw a report yesterday that Fannie Mae was projecting 10% increase in home prices. It was 20% that just came out 2 days ago, year over year, was the average home price increase. They're saying it might be 10% this year, 5% next year. I don't think we're going to hit 10%. I think with the next half a point step up, we're going to start to see the headwind, and we're going to start to see more of a rebalance where I don't think it becomes a buyer's market because we're still supply constrained. But from a pricing standpoint, we start to hit a ceiling and come off of that ceiling a bit. The thing to remember is that for every interest rate increase of 1%, buying power goes down by 10%. So just think of that over the last year. If prices went up 20% and rates went up a full point, which they have a little bit more, we're in a 30% delta from a buying power perspective than what we were facing this time last year. I think one more thing to layer on is just there was a flock of new agents that hit these local associations. And now you have referral partners that are very seasoned or trusted, and they're competing against the friends and family referral of new agents versus, getting that pipeline built up for the much needed listings or those selling opportunities. So I think that's a great perspective. We were talking earlier, Ed, about using this also as an opportunity to tighten the lens on the team, right? I mean, we went through just an unprecedented, almost shock to the system type of overload starting Q2, early Q3 of 2020, and we were just still in a flat out sprint through last year. Can you talk a little bit about that? Like, hey, now is really time to level up the team as well.
Yeah, look, the market, I think we were all surprised by the market in 2020 and 2021. It was incredible. No, I don't think anybody expected it. I certainly, in doing our planning, I mean, we planned to do probably 1,800 transactions a month in 2020, and probably by April or May, we were doing 3,500. So it just was nuts. So again, we knew at that time that this was going to be temporary. Yeah, but it was hard because we didn't know what the temporary was, whether it was a few months or 12 months or whatever. So we, like everybody else, rode that out. Well, now we're back to what I would consider to be more of a normal market. And so we now have to be far more nimble and quick. We have to, in fact, from the standpoint of planning anymore, I don't think it does you a whole lot of good to plan out more than 12 months, and even that is questionable. So I've developed what I call a dashboard, so I kind of know what's going on and throughout the organization. So because I need to make decisions pretty quickly, we can't wait around as this market shifts and hold on to resources that we don't need anymore. We have to unfortunately make those changes. But I think going through this, we're going to end up being a stronger company.
Yeah, I agree with you.
Yeah, and it's I would say again, do not let what's going on the outside negatively impact you and what you need to do inside to build your business, because you have no control over that. When we went through the recession a number of years ago, and people in the office were talking about what the media is saying and all the doom and gloom, and I said, absolutely forget that. Don't watch TV. Don't turn on the news. I'm telling you, this is the time that we're going to grow in spite of this, and we did. But it's not easy because we're impacted in a negative way by everything that's going on outside. I would say that 80% of the stuff that we worry about or we're anxious about or even fearful about are things we have no control over. So,
yep. No, I completely agree. I want to shift the topic now as to just instances of cybersecurity breaches, wire fraud. I'm going to share just a couple slides we put together to summarize the most recent internet crime report. And then Ed, I'm going to stop sharing, and we can talk about maybe what we're seeing respectively. But the FBI, for those of you that aren't familiar, the FBI has a internet crime report through their Internet Crime Complaint Center. So if you think about wire fraud, data breaches, all these different forms of cybercrime funnel up into this report. And the report findings, the snapshot, is that a cybercrime last year was reported every 37 seconds of every hour in the year. And that's down from 43 seconds. So what I mean by that is that they're getting more complaints per minute than they were in 2020 by a pretty wide margin. The losses are just staggering, 6.9 billion in 1 year. So business email compromise was the single largest chunk of that by category. If you're familiar with business email compromise, that wire fraud is how they monetize it. That's where real estate agent, title company, law firm, buyer, seller, email account compromised, information on an upcoming transfer, is put into the hands of the fraudster. Fraudster spoofs someone, fraudulent information, instructions are sent, and money lands in the wrong hands. I mean, that's kind of the flow of that. So if you look at that with the average house cost approaching 400, I mean, that's like stealing over 17,000 homes out from under people in their life savings. There was a 34% increase in phishing attacks. Phishing is the precursor to an account takeover. So the way that they start business email compromise is they start it with well-crafted phishing. And we have seen, and Ed, I'll circle back with you on this, we saw a significant step up in the sophistication, in the velocity of phishing attacks. Who's at risk? So it's essentially the more affluent. It's the generations. So Gen X, Boomer, Silent Generation, those three over the age of 40 that were targeted. Many online dating scams, real estate purchase scams, elderly fraud scams, some work from home scams. Just in California alone, California has led the country in wire fraud and cybercrime. It doubles the next closest state, which was Texas, and then New York, and you can see Florida. So a vast majority, so if you think if we've got 6.9 billion, you've got a quarter of that or a little bit more sitting in four of the largest states and the most affluent states by a per capita income perspective. Just a few more stats that were interesting on that report is the average business email compromise loss continues to go up. Now, this isn't just in real estate. In real estate, we're seeing averages closer to the 300 mark. But they're continuing to focus on wire fraud as a way to monetize these cyber crimes. If you look at the number of phishing attacks has actually tripled from 19 to 21. So we go from roughly 114 to 324. That's just a massive step up. And that's a curve we have to, at some point flatten. So before I get into the next segment, Ed, what have you seen? So what stood out from you if you roll the tape back from 2021 relative to phishing, account takeover, any type of compromise that you've seen?
Yeah, this is a big issue that we have to put a lot of resources on to try to protect not only our clients, but also the jobs of the people that work for us, because one or two major events could basically cause a disaster for the organization. So we've seen an increase in the attempts to defraud us. Thank goodness through our training programs that the majority of these have been caught ahead of time, and we didn't suffer any loss. We've had a couple where we actually were fooled. One, we got all our money back. The other one we're still working on. And this had to do with a payoff of a loan. By the way, I think that our biggest risk, we use CertifID. So I will give you a pitch here. Look, any of you that are watching this that aren't using CertifID, you need to sign up. It's I think a great product, and it also provides a strong measure of comfort when you're dealing with people who are wiring money to you. So, but on the other side of it is the mortgage payoffs, and that's where I think there's a huge risk, because we all get demands from companies to pay off loans, and we have to ask ourselves, is this really the demand from that person? Was any of the email compromised? How do we protect ourselves? We have a whole bunch of systems in place. Everything from, we have red flag things. So that's a red flag. We have to make phone calls on that. But even that, sometimes people make mistakes. So I think that our technology-wise, I think we're strong. We keep adding more things to help us protect not only our email system, but also the in and out of the money, the wiring of the money in and out. But I think the biggest risk for us is the people not trained properly and making mistakes that cause the company a lot of heartburn.
Yeah, no, and I don't know if you can disclose at what what lender was spoofed on the payoff. If it was one of the money center banks, we see it across the board.
No, it wasn't. It was a small mortgage company that, and we, by the way, the one that we were in the process of trying to recover is that in California, we have what we call independent escrow companies. These are standalone escrow companies or settlement companies where we don't have that part of it. We only do the title piece. And so they sent us the demand that we then paid and then found out it was bogus. So luckily, they've taken responsibility, and so now we've got a claim going with their cyber insurance company. But we've had larger ones, like we had payoff going to Wells Fargo Bank, and probably a day before that all happened, they gave us an updated demand, and lo and behold, now the bank that we were paying off was Bank of America. So if you're not looking at this stuff, I mean, we have our title people who are needing to look at this. We have our people in our payoff department that need to look at this. So we do that. We so far we've been, I think, fortunate. But yeah, California, unfortunately, that's not one of the things we want to be known for. $1.2 billion fraud.
No, and look, we've been involved in, we have a recovery services team at CertifID. We're being engaged now daily. It used to be weekly, and now it's accelerated to daily. Know that this year, unfortunately, is starting out with more velocity than last year started. And I'll echo what you said, Ed, is that if you're the dispersing agent, you just have to assume that what's coming over is fraudulent, has been manipulated or tampered with. And we will be announcing the release of a mortgage payoff database shortly. In the interim, best practice, to your point, is treasury templates that are built up on the lender side of the firewall. And what I mean by that is if you haven't done so already, you go back and you start building a whole database of payoffs that you've done in the past. And you put the reps in to curate a known source that when a payoff comes in for Wells Fargo or Mr. Cooper or New Res, or it doesn't matter who, that you have a point of reference of what you know is trusted from history, not from what the future could hold. And while you may have escrow companies, a lot of the country, especially attorney-driven states of the Midwest with split companies, we're constantly relying on other title companies. The seller, they get they end up getting the demand letter or the mortgage payoff statement, and they send it over to the company representing the seller because they're handling that side of it because they're issuing the loan policy. So your nuances, Ed, while the labels may be different, the nuances are the same, is that we're all relying on each other and there's information that's exchanging hands, similar to, for those of you that are in attorney states, and the attorney is sending you the wiring instructions from the seller. Well, how do you know? The attorney doesn't know that it came from the seller and if the seller's account was compromised. But they're saying, hey, trust me. My wife actually bought me a t-shirt a while back that said, trust me, I'm a lawyer. And then they just get stuck, right? You're like, well, you're not getting access to my client. You're not going to verify. You have to trust me because I'm a licensed attorney.
Yeah.
And this is an area where I'm not questioning your attorney abilities or your ability to represent your customer properly. This is about cybersecurity. This is about information integrity. This is about identity verification that falls way outside of a different spillway. So have you seen, just to put a little finer lens on this, Ed, have you seen an increase in phishing attempts, either from, that look like they're coming from the underwriter, they look like they're coming from another title company, they look like they're coming from the mortgage lender? Have you seen that?
We've seen some of that. That's a good question. But my staff would probably be more able to answer that. But yeah, we've seen an increase now. I mean, if you look at even your own personal stuff, you give it stuff all the time that you have to question, especially today. It used to be, years ago, I get an email from somebody that I didn't really know that they're pitching a product, right? And there might be something I might be interested in. Well, I used to look at that. I used to open them up and look at them and say, well, that's not for me or whatever. Or hey, I'm interested. Today, I don't open any of them. I delete them all, and I'm probably missing out on some opportunities. But I don't know these people, and I don't know what's in their email. And so if I click on something that's wrong, now I have a huge problem. So it's better to delete than to be curious, overly curious, and open up an email that may have malware in it or create some major issues for you.
Yeah, what I do in those circumstances, it does look interesting, is I'll open up another window, look at the domain, and just try to go to that domain and see what is this a legitimate company? Like who are these people that are trying to solicit whatever widget or service or whatever, right? So yeah. I understand that.
Yeah, by the way, we have a pretty sophisticated system on our email as well. I mean, a lot of the stuff never gets to me. It goes into spam, or if it does, it pops up and asks me, do you want to keep this or delete it? And 99% of the time I delete them. So
yeah, we recently came across, and I'm just trying to get the consumer to agree to come on. We were involved last month in $1 million recovery originating out of Florida. It was a Gulf of Mexico property, and the fraudsters essentially took over all communications after the first email was sent from the title company to the buyer.
Wow.
And what happened, just to give a little bit of a trailer on what I'm hoping to be able to present next month or the following, is that they had created spoof domains and email accounts for the buyer, for the title company, and the real estate agent. And when those legitimate parties thought they were communicating, let's say title company to buyer, the real title company was communicating with the fraudster's account, representing the buyer. They would take that information. The buyer would then receive filtered information from what he thought was the title company, but it was a spoofed account. And then they triangulate all this information as the hub. So everybody is getting the information they need. It's being filtered and manipulated through the fraudster, but they were able to show over a 2-week period that they know how to manage an entire transaction, from title commitment to curative to survey to workup to close to dispersing. And it was incredibly alarming for me as I saw the level of patience and the just the expertise that they have either gained or hired out locally to be able to do that. But I think that's what's concerning. I want to dive into right now, Ed. Give me 1 second. One other report recently hit, and this was the title report publishes the voice of the title agent. And they go through and I had submitted to this, but at the end of the day, we as title agents have the ability to take this survey every year, and it crosses everything from, what do you think business is like? And are you an independent or are you a captive title company? All these things, right? As it relates to this issue of what's keeping us up at night in cybersecurity, there were some interesting call outs. And Ed, in line with what you were saying, what's your best opportunity over the next 12 months? You said exactly that. I'm focused on sales. I'm focused on technology that is going to enable people to be better, more productive versions of themselves. That's 80%, those categories combined, of where thought leaders are heading. And I'll throw myself into that category, doing the exact same thing, right? Internally and externally, getting more efficient, fewer touches on the file to get to closing. But then how does that go out from a market standpoint? And then look at the top four responses. Now, these all tabulate to more than 100, right? So it's not on a 100 scale. But at the same time, 6 out of 10 said, I think the economy is my biggest challenge. Staffing, 4 out of 5, roughly. And 3 out of 5 is cyber threats, or 3 out of 10, and then another almost 3 out of 10 is operating costs. So I think those are those are the things keeping us up at night. As it relates to cybersecurity, we've seen this question many times: is enough being done? And while the stat continues to go up in the favor of yes, we still have half of us in the industry saying, well, no, there isn't enough. There isn't enough conversation. There isn't enough socialization. There's not enough content around data security and cybersecurity or wire fraud security. And then I just want to spend a couple minutes on this. If you have not gone through your E&O and cyber renewal yet this year, strap in, because I'm just finishing it. And it was an enlightening exercise. Let's just say that. The insurance markets have been focused heavily on small to medium business size of risk. That's all of us on the call today, maybe except for the underwriters that are on. But they don't like us as a pool because we're not security companies. We're typically not as security forward as other industries that maybe are in healthcare with HIPAA or fintech or things like that. And we're moving just a ton of money and personal information electronically between multiple parties. So it's just like this perfect cocktail of bad risk. So to give you kind of a leading indicator, as we underwrote through London, our cyber policy, we are being asked to identify the number of records that we have that hold personally identifiable information or non-public information. We have never received that question before. How many records do you have actually? And this relates to data breach and ransomware, right? And then of the records you have, what is your record retention or record destruction policy? Well, for those of you that haven't thought about this, most underwriters, and we underwrite for all the big guys, 10 years. 10 years. Because remember, title insurance starts today and goes back to Adam and Eve. It doesn't go forward. It's not like the auto insurance that it's insuring me for something that's about to come. The event would had to have taken place, or the cause of action, before the closing. That's the whole point of why we diligence the file before we work up and close on it, right? So the challenge there is I've got IRS, Patriot Act, OFAC, I could go on. And then I've got my underwriter saying, yep, we like to see 10 years. Well, 10 years of what? The policy, the workup? Do I have to keep a 1003? Why am I keeping the mortgage documents in my file? I'm just saying that these are the things that if you haven't been through this exercise yet, be prepared, because they're fencing in. They want to better quantify down to a record basis what's the exposure. So, and I did way too much talking there. What are your thoughts against that?
Well, I think we're the losses, of course, these companies, they're trying to protect themselves, obviously, from future losses. So they're asking more questions, and that's being smart. But I think what it sounds like is going to be a little bit more challenging to get your insurance, either your coverage in your E&O policy or your cyber policy. And I think most, and that's not an area of expertise for me, the insurance side of this, but that's certainly something that's concerning I think would be concerning to everybody in the industry, because without that coverage, we really are totally exposed and can be wiped out very quickly.
Yeah.
So I think making sure that we have that coverage, I'm not surprised that they're asking more questions because they're trying to minimize their losses, but providing that would be a very challenging or time-consuming process, I guess, right? You would know, you just went through it.
Well, yeah, I mean, just to spend 2 more minutes on it, it was the idea, well, how do you define a record?
Yeah.
So is a record that I have Ed Lorette from 5 years ago that was doing a purchase file, but I have Ed Lorette signing a purchase agreement. He signs a Patriot Act form. He signs an identity verification form. He signs a disbursement authorization form. He signs the other title company's FHA disclosure form. So is that 8 records or is it 1 record? And we had to have a pretty significant conversation with London to say, you are not formally defining what constitutes a record. We need to have that conversation first before I can answer your question. Because what they said is if you're sitting on more than 2 million records, we will not quote you for coverage, period. Well, you can get to 2 million records really quick, and you can get to 2 million records in a year.
Sure.
Right. So,
very good.
So just be prepared. I don't want, this isn't meant to be an insurance, but I'm saying that all of these things start to stack up. And it's to your point, Ed, I think when these claims come in, they're starting to get more savvy on what is this title and settlement industry really about. We have more risk outside of missing HOA and taxes and a mortgage and a judgment lien. And now we're really looking at these as massive honeypots for data, personally identifiable data, and funds transfer losses. So I just think there's a shift in how the insurance markets tend to be looking at us as a pool of risk. One more slide I wanted to share. And again, if those of you that have received this Voice of the Title Agent report, but it really gets into like technology. One of the things that excites me about the industry more than anything is that we actually have good technology that solves problems and creates efficiencies and better experiences internally and externally. And just the top there, e-recording, escrow account, cybersecurity. I mean, I just applaud the industry for consuming solutions and applications that all of us, I mean, the financial services, healthcare, manufacturing, now real estate is adopting. And it's really more of a, I would say a recent phenomenon, but it's a more of a recent phenomenon in the last several years. But you can see there some of the, and everyone will get a copy of the deck after the presentation. But Ed, how do you look at technology? I appreciate the plug for Certified, and I'll send you your gift card in the mail. but you're very much a tech forward leader. How would you describe, your technology stance?
Look, technology, we have to embrace this technology, and we have to be looking for better ways to do what we do, and to increase not only on the production side, the quality of the product and the speed, but also protect everybody in the process. So I see technology as a very, very important part of what we're doing. When I got in this business, I have to tell you, there wasn't a lot of, everything was done by hand, basically. So today, that's not the case. Our company, like probably most today, are what we call paperless. Everything's digitized, everything's in an electronic file, which makes it so much easier for us to find something when we're looking for it. We don't have to go out and get a file out of storage. I know some parts of the country that's not the case. Even in the state of California, because I just participated in the California Land Title Association conference a week or so ago, and they were talking about some of the smaller counties, they still do everything by hand. But to me, that's a risk. I really think you need to have the best technology you can get and to help run your business and produce your product and reduce your cost and to protect you from those liabilities.
Yeah, I completely agree and subscribe to it. And it does, if implemented properly, technology has to intersect with the workflow. And,
right.
The way I view technology is it either amplifies bad or amplifies good behavior. So
yeah, there's always the challenges with the technology. For example, we just switched over. We had an operating system we're using since 2006, and determined that it was no longer the one that we should be using. So we switched over. We worked with the developer for 19 months to actually make sure the product was proper and worked for us. And we're just moving off of what we were using for all those years into something new. In addition to that, we upgraded our email system to better function and also provide better protection. And all of those things are time consuming. And quite frankly, even though you do a really good job of working on putting all the pieces together and anticipating what the problems are or not, invariably, even when you launch it, all of a sudden there's things that happen and go, why is that happening? We got to fix that. But we need to, we have to embrace the technology. Bottom line is we can't run our business without it. And if we don't, we're going to be left behind.
Yeah, I agree with that.
Mhm.
And what keeps you up at night or gives you the most heartburn as you think about first-time home buyers or people entering this?
I guess I would answer that question is that I think the majority of the people, you mentioned this earlier, but the majority of the people in this category are uneducated about the process of a real estate transactions, the potential dangers. So they need to be better educated, and we need to do a better job of that. I was thinking about this morning. What can we do to help educate the people who are buyers, basically buyers or even sellers? And probably would make sense for us to have training programs for those individuals. That we can do them on Zoom, we can do them in person if necessary, but to talk about the process itself and put it in simple terms that the average person can understand, but really focus on the real dangers of making sure that you're working with a company that has the technology and the protection that you need to make sure your money gets where it's supposed to go and you don't lose your life savings, and that you end up with what you expect to receive. So I think that's a big issue where the new people are coming in, as you pointed out. I mean, they're into all this technology, right? Which is also extremely porous when it comes to the bad guys getting in and stealing information. I mean, you go online today. I'm not a fan of Facebook. We have a page on Facebook for the company, but I'm not really a fan of it because whatever you put on there, anybody can see pretty much. Most people don't do a good job with the protection, meaning making sure that what's private and what's not private. So you can go there and find out a whole bunch of stuff about somebody, and you can use that to take advantage of them. So those are all things that I think are problematic.
No, I agree. I was just an hour and a half ago on with almost 300 lawyers in Illinois on a similar discussion. And we were just talking about the standard of care. And we were talking about, who owns the duty to educate our consumer clients, the people that are trusting us to assist them in this process.
Mm-hmm.
And the answer is everyone. And I do believe, though, that those companies, many of you I can see in the chat, and I recognize the names that are putting in the work, that are making the investment. Think about how to position that as another item of strength in a market where, like you say, every transaction relationship is going to matter. It's a point of differentiation. If we're not talking about wire fraud, and we're not talking about data security, and we're not talking about success as it relates to the protection of life savings, then we've missed an opportunity. The industry has missed an opportunity to say, look, I've made the investment, and the Neanderthal from a digital perspective down the road has not. That has to be a point of distinction. So yeah, I can provide you great closing experiences and accurate commitments and quick turn times on CDs. And that's the blocking and tackling. We always say the minimum standard is perfect in our business of the work. But what are the other things that, look, guys, you can miss HOA, you can miss a proration, you can miss a broker admin fee. That's one thing. You get $1 million squirreled away into Nigeria on a closing, and that is a long tail of bad that everybody's invited into. So I also agree. I mean, we've been on the same page for many years, but I agree with that. I'm going to share some quick takeaways because just in the interest of time, and Ed, I want to get your closing thoughts. I think we're aligned that it's changing, but change for those that embrace it and can clinically dissect it. I do think it's going to be a fundamentally, these are all ones, I'm sorry, I edited on my iPad earlier, but it's meant to say that no one's more important than the other. It's changing, right? But changing and pivoting, and what do we do to make ourselves better? Marketplace positioning through technology, through just really becoming that partner. I think you said it best, Ed, it's partner level relationships, not vendor level relationships. At the end of the day, if you boiled it down, we're all selling bottled water, but not all bottled water is created equal, as crazy as that sounds, right? When you go up to the case, there's one brand or mother that might step out. you've got to be that brand that they clearly identify with to say that means more than, some other label or some other conversation someone's trying to have. Guys, I hate to say it, but cybersecurity is going to remain the biggest risk in the industry for the foreseeable future. And there's not a close second. You could say, well, my business pipeline, yeah, I get that. But these are takeout, like turn the lights off moments, because the table stakes are becoming so large. So when we talk about insurance and we talk about data security and in funds transfer, really investing in that education, like Ed and I talked about, who owns that burden? There's a formal ethics opinion in North Carolina that goes out to all bar members that says, even if you're aware, even if you're copied on an email that somebody has educated the buyer about wire fraud, doesn't absolve you of the responsibility to do it yourself, right? You got to be able to document that. We put in the reps and we educated them. And I always just define value of team members and others as people that obsess more than I ever could over certain topics. And I think as we approach this year, and I know you're up at night early and I can see the emails of just who do we need to be as industry participants as our referral partners struggle as well. But with that, if you guys have any other questions, Ed, I want to thank you for the time. Any parting thoughts for the group? I thought this was a great conversation.
I would, I just say that keep a positive attitude about what's going on. You can't. It is what it is. We have to navigate this process, and a lot of times what happens when we look at changes. Well, most people probably look at it this way. They look at changes. I don't like to change, and the reason they don't like to change is because they're in their comfort zone and they want to stay there because it's comfortable. But two things is, one, if you're comfortable, you're not growing, you're not learning, and you're not taking any risks, which is not a good thing. And change is your friend, not your enemy. Now, I've heard people say all the time, I don't like change, I don't want to change. And then they'll say to me, but I'm really unhappy with where I'm at. Now, you can't get from where you're at to where you want to be unless you change. So it's really just, I think, important for us to make decisions that are in the best interest of our employees, because we have a responsibility to them to make sure we make good decisions so that we protect their job. They have an income, they can pay their bills, they can send their kids to school, they can take their vacations. If we focus on that, then we have to ask ourselves, what do we need to do in order to provide that measure of protection for our people? If we do a good job at that, your company's going to grow. You're going to be able to attract other quality people to your company, and your turnover will be extremely low.
Love it. And I couldn't say it better. So thank you.
Hey, you're welcome. My pleasure.
Thanks, everyone. I'll see you next month.
All right. Take care.
Take care.
Bye. Bye.